Money Chat. The ability for buyers to find and afford homes remains a challenge here in South Florida and really nationwide. That's why the Trump administration continues to look for options to get the housing market moving again. The latest proposal is to possibly let buyers assume an existing homeowner's mortgage. It's got the attention of real estate and mortgage professionals, but it does have a few potential drawbacks for buyers. Much of South Florida's real estate market remains on ice, still frozen. Blame too many buyers chasing too few homes for sale, coupled with high prices and high interest rates.
We need to get housing back in this country, so every little piece counts. That's
Bill Pulte, the head of the U.S. Federal Housing Finance Agency. He suggested in a post that the Trump administration is, quote, evaluating the possibility of making interest rates portable, meaning if you already have a low rate on your mortgage, you could carry it with you to purchase your next home.
Welcome to this magnificent home in Parkland Golf and Country Club.
Coldwell Banker and luxury home specialist Nikki Rietti, who serves Parkland and Coral Springs, welcomes any action to reignite the stalled housing market.
So many people have wanted to move over the past few years, and they're just not able to because of the interest rate. This would help a lot with that. It would also help to open up some inventory of homes to other buyers who have been looking for homes.
Mortgage broker Bobby True says right now, other than private lenders, this kind of portable product doesn't exist, and transferring loans may be a tough sell to lenders.
Everything that goes behind that would be very, very complicated. But that's one way that you could get the people who are sheltered in with their lower interest rates out of that and into a new property or into an upgrade in property.
Another administration concept being kicked around, making more mortgage loans assumable. Those mortgages would allow a seller to pass their low interest rate mortgage onto the person buying their home, versus taking out a brand new loan at today's higher interest rates. Experts do warn there are some potential perils. Sometimes with current assumable loans, buyers need to bring more upfront cash to the closing table because of something called an equity gap.
For both buyers and sellers, the numbers still have to work. You want to compare monthly savings versus extra cash needed upfront, and also the timeline to break even.
Also, transferring an assumable loan, like you sometimes see with government VA and Freddie Mac mortgage instruments, that doesn't mean the buyer can automatically take over the terms of the loan. The purchaser assuming the mortgage must still meet credit requirements and go through the lender's underwriting process.
Once they've defined the terms of this product, purchasers are going to need to match the criteria that banks are looking for. So it won't be for everyone,